My gosh, wow, well, that could be a whole hour yes.
Let's speak practically about the business.
Хорошо,
Okay.
да, понял. Hi, my name is David DOSS. I'm with CKC.fund. I am a fund manager and program and advisory services provider in the digital asset and cryptocurrency space. So briefly on my background, I researched civil and social development as well as the relationships between ideology and technology in the modern world in my earlier years. This made me very fascinated with decentralized technology, blockchain, etc. I have spent the majority of my career in the digital economy space, including in startups in Silicon Valley, in the San Francisco area, as well as in Silicon Alley in New York City. And this has also included digital transformation initiatives within larger organizations such as Citi, Saks Fifth Avenue, and others as well. Within that, I have spent the last 7 years in the blockchain and cryptocurrency space. It's an environment that I'm really passionate about. So I'm excited to be here in a crypto community of friends and to be discussing blockchain-related topics and initiatives.
One of the most hot topics as of now is regulations in USA and ETFs and all these things. Like you being a fund manager, how you look on this and what are your thoughts about it? Whether it will go further, no. Moreover, we all know that Hong Kong is now actively introducing ETFs on that side of the world.
Right.
So what is your view on the situation, how it will develop?
My gosh, wow, well, that could be a whole hour yes, so briefly, the highlights. So there are a couple of things to mention in this area. So firstly, just looking at the performance of the crypto asset class in the last year, in 2023. It was actually the best performing asset class of the year, even though there was a lot of negative publicity, a lot of fear, uncertainty, doubt. Bitcoin outperformed major indices for stocks, bonds, real estate, oil, gold, and other commodities as well, while showing a low to no correlation with those various asset classes. So this highlights a use case from a measured and risk mitigated perspective. This highlights the use case for digital assets to basically provide a hedge against volatility in other markets, while also providing asymmetric upside opportunity to a larger portfolio of an investor that might include other assets in real estate or stocks, etc. The other points around the ETF, especially the Bitcoin ETF approval in the United States most recently, this was really the icing on the cake of an already actually surprisingly good year for the crypto market, where it is, I think, the beginning of a new chapter where it will help to basically provide increased capital inflows into the digital asset space. The other part, though, that I think becomes increasingly relevant is that there will be, with that increased liquidity, there will be more of a push for sophisticated and actively managed approaches to investing into digital assets, because the upside of Bitcoin specifically may end up becoming more limited by the increased capital inflows. So what we see is, on the one hand, an opportunity for the overall market that, yes, there will be more money coming into the crypto space, but also there can be more demand for fund managers, for expert investors in the crypto space who are looking to mitigate the risk within the crypto sphere to provide better returns at lower drawdowns, better Sharpe ratios, these kinds of things. And lastly, on the regulatory aspect in general, I think there is a lot there. We will be seeing this year more regulation coming out in various countries and continents, and I think this can largely be a good thing. I will say, from my perspective as a fund manager, I have chosen largely to interact with the Cayman Islands, because they already, from my view and for the needs of the initiatives I work on, they tend to provide a very clear framework for digital assets in a way that the United States has not yet quite successfully done as well. So point being that firstly, I think that going where you're treated best from a regulatory standpoint will become an increasing theme, that you have this, they call it the new Silk Road between of the in terms of the spice trade, and referring to earlier history many hundred years ago, but the new Silk Road between Hong Kong, Dubai, Abu Dhabi, as the Caribbean. You have these smaller nation states really pioneering regulatory frameworks that perhaps other nations larger nations may end up adopting.
So, something very interesting you have mentioned, because like I'm as a core advisory, we this year plan to get a wealth management license in Abu Dhabi, set up and manage funds for our clients. This is like an area which we have a gap right now. Like we have lack of expertise, lack of people, lack of licensing, regulation. So like we use third-party provider solution, but we don't go for it because like our own infrastructure. And it would be really good to hear your opinion. Like we're in particular looking to Abu Dhabi. How Abu Dhabi relates with Cayman Islands in terms of funds and everything else, because I mean, like you have more experience in this.
Yeah, it's an interesting question. Well, I think there are two parts of that strike me as particularly relevant for consideration. So the first part you were talking about was the developing one's own infrastructure. So this brings up a larger point, that there are far more investors requesting from their wealth managers, private bankers, etc., far more investors requesting these professionals for crypto and digital asset solutions than there are professionals who actually provide it. So I think there are a lot of opportunities around partnerships with more traditional players, but then there are also a lot of opportunities for creating one's own infrastructure. Basically, there's way more demand than there is supply. I think that's fairly true across the broader spectrum. To your other point around the regulatory similarities and differences, also not legal advice, not financial advice, but I would say from my experience, while I'm more experienced in Cayman than in Dubai or Abu Dhabi, I have a lot of respect for the regulatory climate in Dubai and Abu Dhabi. I would say personally, I see a lot of opportunity there. For one thing, there is already, I think, a fair amount of collaboration between the two, that a lot of Gulf Coast country investors are fairly comfortable with a Cayman framework, but there's also a desire to have frameworks that are more kind of local to them. So ultimately, I would say I think that there are a lot of strengths and advantages to both of those regulatory systems, but it comes down to what the goals of the fund managers, the wealth managers, and the goals of the investors are going to be.
So in view of this, like last year, prior New Year, I was in Saudi Arabia, and they've appointed a new deputy National Bank of Saudi Arabia, which was responsible for crypto in particular. We started conversation on that, but it's like freshly appointed. He asked some time to get known regulation situation and everything else. Why I'm telling this? Because the same process we see in States, the biggest market, very important. In view of this turmoil, as a fund manager, how do you see projects? On which countries you are looking at, fund manager? Which type of projects? How you assess their regulation readiness and all these things?
Well, that's very complicated considerations, I think. On the Saudi Arabia side, I agree. I mean, I think there's a lot of opportunity there. I was actually in Riyadh only about 2 weeks ago myself, and I think that, to your point about new governance in Saudi Arabia and its relation to blockchain and crypto, from what I hear, there are strong rumors on the streets, so to speak, that Saudi Arabia may end up introducing a regulatory framework around digital assets sooner rather than later. So possibly at some point this year, possibly not, but in the near future is highly likely, according to many experts that I've talked with. So in that regard, I agree that there's a lot of opportunity there. In terms of the United States, I mean, it's a little bit of a separate question, in my view, because you have state-by-state regulation as well as the federal level. And so you see a lot of very different approaches from this, ranging from let's say, Wyoming, which has historically tended to be kind of like a open arms welcoming of a lot of new technologies, versus, let's say, a jurisdiction such as New York, which has tended to actually add on regulation beyond that the federal level might have. It is important to basically follow the regulations that you have committed to, right? But to find the ones basically that can fulfill the goals of your fund and of your investors. So this is not a question of escaping the rules. It's a question of finding rules where everyone can win.
It's a very good point on this, but for us personally, and like for me personally, yes, it's a big issue because as of now, even having crypto licenses, we do not work with clients from US. Despite having people and personnel in US, we still, with very great cautious looking of outcomes of all these court proceedings and so on. Because for me, it's a nightmare to face a court case with SEC and this like millions of dollars for lawyers and all this PR negative you receive out of it. So we're like with very great cautious looking at what's going on and waiting for proper license regime to start working there.
Yeah.
Even projects which we have there, we're like looking at them and only advising them in capacity of management consultancy, but not investing, not interacting with in other capacities. So this was my question from Caymans.
Yeah.
Can you interact with American projects, with American clients, or you also deal with them with a great cautious?
In short, it depends. I would say I applaud the caution that I think a lot of crypto projects and crypto fund managers, they would rather be safe than sorry. This is much better than the dynamics that we saw in the space 6 or 7 years ago, which was let's see what happens at the time, and then we did see what happened, which was a lot of lawsuits, right? So I think better to err on the side of caution. When you are managing other people's money and when you are working through very very complex problems, right? So that part makes a lot of sense. But beyond that, to the point of U.S. and Cayman, I would say that there are situations in which it could make sense for a U.S. investor, for example, to invest into Cayman. There are also situations where it could not make sense. Another factor that has become kind of an additional complexity in the area you're talking about would be the banking. So it's not just a question of where are you investing. So are you investing into a Cayman company or a UAE company, right? But where is the money actually going? Because that may also have implications in terms of tax, legal, and regulatory as well. And it's important for the institutions, the fund managers, the crypto projects, as well as for their clients and investors and customers to be bearing in mind those factors and for there to be transparency in that.
Listening to all this, it gives me more thoughts. Yes. And when we say investing in crypto, gives you a big, huge variety.
Yeah.
Which particular sectors you like?
So,
which particular projects you like? Which fields in crypto?
Yeah, it's an interesting question. There's what excites me, what I kind of, let's say, enjoy reading about in my spare time. When I'm not professionally researching things, what will I then spend maybe some extra time researching? I think crypto and blockchain around music and entertainment, for one thing, is really big. So one thing that we are looking at in terms of some assets that we are managing, as well as some partners that we are supporting, is basically the interrelationship between artificial intelligence, blockchain, and the next generation of media. So think, for example, of artificial intelligence use cases where you create an alternative ending to a television show by just saying, "Hey Siri, play me this episode." Behind the scenes of something like that, you would have the AI rendering, and you would have the questions of IP, patenting, licensing. You would have questions of how to pay the artist for their image and likeness being used by the AI. You would also have questions of how to detect deep fakes, for example, authorized usage versus unauthorized usage, micropayments of small amounts of royalties. These are the sorts of things that blockchain and cryptocurrency have the potential to help with. Another area that I think is quite interesting right now is actually kind of the Bitcoin platform economy, so to speak. So there has been a kind of resurgence of, for example, ordinals, Bitcoin NFTs, as well as kind of technologies layered on top of Bitcoin. Sort of thinking of treating Bitcoin as if it were Ethereum is maybe an oversimplification, but investments around that ecosystem, I think, been showing some potential. So those are in terms of some specific areas. But the other answer would be more a question of proper risk management around this. That it ultimately does come down to, much like if you're investing in stocks or bonds or real estate, most people, they will often choose to diversify, between industrials and technology and finance and healthcare, between high cap, mid cap, low cap. Especially from a professional management perspective, they will rebalance this into different assets depending on what's going on, day to day, week to week in the market. That is the sort of thing that we find the most interesting, where ultimately it's a question of a constantly shifting tapestry that requires active observation and active reaction to.
So we will end up with different ETF types, most likely.
So there are potential for ETFs. The thing, though, is that with the ETFs is really more of a passive vehicle in a way, which certainly does have its advantages. But to my previous point, that when you have something with a whole lot of access and a whole lot of liquidity, it tends to have a different return profile.
Being a fund manager in investing, which type of projects you're looking first before investing? How you make, this like even go, no go selection. So what's like the crucial for you in the projects? Because like within our clients, we have lots of them which do like side projects, small, big, and they're pushing, pulling, looking for financing and everything else. So how you look on these old projects? What is no go? It's just that basic. 3 to 5 points.
Yeah. Okay. So certainly, first thing would be crypto, digital assets are special just like any other asset class. So just because it's this new thing doesn't mean it's like completely different. You have apples and oranges, but they're still fruit. It's not apples and statues, right? So you need to apply fundamental analysis, asset evaluation. You need to do research. What exactly you're researching and how you're researching it, it may adjust, right? So another point on that would be that what we do is we build out a broad variety of market signals, looking at roughly 20 to 30 different market signals, and then evaluating each of those signals, weighting the importance of those signals, and then reevaluating them on an ongoing basis. And so it would be, the short answer would be more bottom-up, fundamental analysis driven. So that would be one approach, which is the one that we have found to be the most successful for our goals and those of those that we serve. Beyond that, I would also say though that there are limitations, right? Where, for example, when you have meme coins, it's a little bit harder to do fundamental analysis on a meme coin, but there are very strong correlating factors as well as possible causative relationship. It's a question of analyzing different things more on the social media, on the brand potential. It's really more of a question of marketing than it is of kind of traditional, let's say, Goldman Sachs style financial analysis, right? But there still can and should be an analytical framework to it. And then similarly with very, very low cap projects, pre-sales, early stage projects with little to no liquidity. It's hard to kind of create a like a public equities type of framework around projects like that. But that doesn't mean that they shouldn't be analyzed. There are absolutely one absolutely can and should create those frameworks.
No, why I was asking this question, because during the last couple of years, I would say 3 to 4, we saw a number of deals with top venture capital funds from the Valley, given simply hundreds of millions of dollars in projects just with idea.
It was probably the right thing to do at the time. So the reason I say that is looking at the life cycle of emerging asset classes, you do see early stage VC play a very significant role at the beginning. If it's brand new, it's early stage VC is the logical choice, right? It was and is as it should be. And to me, this era of the Bitcoin ETF is kind of a very convenient mile marker of that new opportunity to basically conduct a different type and a different level of rigor in the space, but also to provide investors with more liquidity, more transparency.
You have mentioned one very interesting thing, that you expect more regulations and more, let's say, traditionalizing of crypto and equality with other instruments. Like you have mentioned apples to apples, oranges to oranges. Do you expect with this decrease of yields and profit rewards the market has, like, used to have recent years?
So yes and no. For Bitcoin specifically, probably, because you have the Bitcoin ETF, for example, or for really the top projects. But there are approximately 23,000 different cryptocurrencies out there, right? To be honest, questions and challenges around an ETF, right? So when the gold ETF came out, for example, it did provide more liquidity, more opportunity, democratization, but it did also really limit gold's return profile. And relatedly, it also opened up unfortunate opportunities for people to kind of box in the gold market, where there were, for example, fines from major investment banks around multi-year-long market manipulation of gold, right? So when you think of something like that, though, does that mean you should never invest in precious metals? No, but it might mean, for example, that you might want to consider diversifying into other precious metals that have a different return profile.
No, I have very maybe polar opinion on what happens with gold and all precious metals. Because with all the precious metals, you have very limited use case. And that's what's limiting. I mean, like, okay, you can buy physical gold, kilogram, ton, 100. What you will do with it? Jewelry? Really?
So
it's very hard. With Bitcoin, it's way more easy because you have, even now, when the instrument is very young, you have a lot of different opportunities, like to change Bitcoin, to invest it, to stake it, to farm it, to yield. Like a lot of instruments. And it's like everything is a use case. And the more you go further you go, the more use cases you have. So even like one of our clients has crypto ATM in Latin America and in Spain. So this is like, I was really, surprised, because you can come to this machine, just enter your card, receive BTC, vice versa. Okay, commissions are crazy. It's true, but it works.
Not a bad business to be in.
But it works.
Yeah, it does work.
Years.
I agree that when it comes to utility, there's dramatically more utility to the digital asset space than there is to gold, right? But relatedly, it is, I think, for better or worse, often compared to gold. So what I would say to that is, this to me might be almost like a worst case scenario, because as you say, we're dealing with an asset that has much more utility. So what I'm saying is, worst case is, I think, still looking pretty good. But I agree that I personally have a cautious optimism that it will be better than that case example. And I think another related point around that is that digital assets are often unfairly compared to gold. There's this term digital gold, which it's an attempt to get people to kind of better understand the value. But I think it also does a bit of a disservice, because ultimately Bitcoin, as well as many other digital assets, actually are not at all very correlated with gold. They have a different market cycle and a different return profile. So yes, while it does have some similarity, like you were saying, I agree that there are a whole lot of differences that play to the digital asset class's advantage.
The last questions on my side is, in terms of investment and development of the funds you manage, what are your plans for 2024?
My team and I at CKC.fund are really looking forward to this new opportunity. There's been kind of a reset in the markets. So really what we're looking at doing is really just continuing to build out infrastructure where we can really handle that increased demand, but also where we can handle that increased opportunity. When you see the opportunity coming, it's often too late. Like the analogy I like to use is, if you are on the beach with your surfboard, looking at the wave, by the time you see the big wave coming, grab your surfboard, paddle out, you will have missed the wave. But if you are lying in wait, actively waiting and preparing, on your surfboard in the water, then when that big wave comes, you can ride that wave. So I think those are the things that we're looking forward to: is preparing the infrastructure, preparing the demand, and helping to really build up the space in this new year.
Do you educate your clients?
Yes, I think that education is very important. So it's been great to be here, live in Davos, Switzerland this January. Education has been a huge part of things. I helped to organize the Digital Davos panel series, and it was great to have you as a guest in one of those, and with your insights on a lot of really interesting macro investing and geopolitical issues. Also, we release, newsletters. We release, thought leadership and opinion pieces, market commentary. So, for those who are interested in learning more about the space, would encourage you to check out some of our content at CKC.fund or on our LinkedIn, CKC.fund LinkedIn profile. We have a lot of educational materials. But yes, I believe that ultimately, these are very personal decisions that come from a place of self-education. So really what we just look to do is to provide people with the tools, and they get to kind of select what they want to need.
I see here, a very big cooperation opportunity. We develop our Telegram channel.
Wonderful.
And I'm more than sure that for our readers, it will be really interesting to have information from a professional fund managers on views, their analytics analysis as an alternative opinion to our journalists.
Well, I look forward to future collaborations and future conversations. Really appreciate you taking the time to talk through these important and fascinating topics.
Thank you so much. It was my pleasure to speak to you.